for Monday, 20th July 2020. Let us give you a lineup of what we'll be discussing this morning. We'll take a review of market performance in the previous week, give you a bit of global market review, and also bring to you the Unilever Nigeria PLC, who has declared a turnover of 60.5 billion naira, and Security and Exchange Commission's drive to attract more investors into the markets, some European markets updates, and of course, a book launch that is coming forward this week. Let's begin with the fact that equities market closed last week on a negative note as the NSE depreciated by minus 0.17% to close at 24,287.66 basis points as against plus 0.83% appreciation recorded previously. Its year-to-date performance returned currently stands at plus 9.52%. Market breadth closed negative as GlaxoSmithKline led 10 gainers as against 12 losers, topped by Linkage Assurance. At the end of last week Friday's session, an improved performance in terms of comparison with the previous outlook. For market turnover, it closed negative as volumes moved down by minus 22.58% as against minus 0.44% downtick recorded in the previous session. Custodian Insurance PLC, Japoil Oil, and Nigerian breweries were the most active to boost market turnover for last week Friday, and Seplat topped market value in terms of the list. For the volumes, a total turnover of 1 trillion and 16 billion shares worth 7.436 billion in 18,092 deals were traded last week by investors on the floor of the exchange. In the NSE OTC securities, the NSE OTC market closed on a positive year-to-date as the market recorded an increase in performance for last week. NSE Security Index year-to-date return rose by 1.28%. Total volume traded was for the year-to-date stands at 7,815,917,097 units in 830 deals, and total value traded was 10,387,451,095.52. The NSE Securities Exchange closed the week with a negative return in the unlisted shares index. The NSI return fell by minus 0.19% to close the week at 706.44 points, as against 707.77 points in the preceding week, Friday, July 10, 2020. In addition, for week 29, it saw the NSE investors lose about 0.97 billion in value. NSE OTC market cap closed at 518.93 billion naira compared to 519 billion naira 90 in the preceding Friday, resulting from a negative movement of prices. There was a 230.09% increase in the total value traded during the week, as week 29 saw NSE investors trade a total of 197,475,203.50 in terms of shares compared to 59,825,475.95 in the previous week. Total trade activity for the year is valued at 10,387,451,095.52. In the same pattern, the volume traded during the week was 7,758,227 units compared to 10,737,277 units in the previous week, leading to a minus 27.74% decrease in trade volume compared to week 28. Total volume traded for the year is 7,850,917,097 units. Last week closed with UBN Properties PLC ranking top among 5 most traded securities by volume, and Friesland Campina Wamco Nigeria PLC as the 5th most traded stock by volume in week 29. The week closed with Niger Delta Exploration and Production PLC ranking top among the 5 most traded securities by value, and the UBN Properties PLC stood at the 5th most traded security by value for the week. 2 of NSE OTC stocks closed the week with a positive movement in price. the Central Securities Clearing System PLC, which currently holds a market capitalization of 70 billion naira, closed the week at 14 naira in terms of share, representing a 3.70% increase from the previous close of 13 naira for 5 kobo per share. Afriland Properties PLC, which currently holds a market capitalization of 3 billion naira, closed the week at 2 naira 2 kobo, representing a 2.80% increase from the previous close of 2 naira 14 kobo. Two of NSE/OTC's big stocks closed the week with negative movement in prices. UBM Properties PLC, which currently holds a market capitalization of 7.87 billion naira, closed the week at 1.4 naira, representing a minus 2.78% decrease from the previous close of 1 naira 44 kobo. Niger Delta Exploration and Production PLC, which currently holds a market capitalization of 65.62 billion naira, closed last week at 306.65 naira, representing a minus 5.5% decrease from the previous close of 325 naira. That's for the NSD. Let's get on to the money markets. The overnight rates expanded by 765 basis points to 21.8% as outflows from the cash reserve ratio debits late in last week outweighed the combined 430 billion naira that came into the system from OMO maturities, which was about 69.55 billion naira. The FX retail funds, 220 billion naira, and the FGM bond coupon payments, which was about 40.45 billion naira. According to Codros, who wrote this and was published on ProShare, they expect the overnight rates to trend southwards this week as inflows from the OMO maturities, which is about 20.35 billion naira, and the FGM bond coupon payments, 133.18 billion naira, are expected to come into the system. Let's go on to the Treasury bills. Treasury bills secondary market closed last week on a bullish note as average yields across all instruments declined by 11 basis points to 4.5%. Across the segments trading in the OMO secondary markets, minus 7 basis points to 5.6%, improved on the back of the healthy liquidity in the system. Similarly, bullish sentiments prevailed at the National Treasury bills segment, minus 19 basis points to 1.9%, as participants covered for lost bids at the primary market auction. Still at the PMA, the Central Bank of Nigeria rolled over 107.04 billion naira maturing bills as the auction was oversubscribed, given the dearth of alternatives for local fund managers. The Central Bank of Nigeria allotted 8.85 billion naira for the 91-day, 26.60 billion naira for the 182-day, and 71.60 billion naira for the 364-day at respective stop rates of 1.30%, previously 1.80%, 1.80%, previously 2.04%, and 3.35%, previously 3.75%. Codros projects that in this week, the expectations is that there will be improved demand for T-bills as the system is saturated with liquidity, something all investors should take note of. For the bonds market, trading in the Treasury bonds secondary market remained bullish as increased level and local participation improved system liquidity and sustained demand for instruments in the space. Consequently, average yield contracted by 32 basis points to 7.8%. Across the curve, yields at the short was minus 80 basis points and long was at minus 18 basis points. This ends contracted due to the demand for the April 2023 10-year bonds, which was about minus 143 basis points, and the March 2050 10-year bonds, which was minus 27 basis points, respectively, whereas it was flat at the mid-segment. Codros, the expectation is that investors' focus will shift to the primary market this week as investors anticipate supply from this week's primary market auction. At the auction, the Debt Management Office will offer this week 150 billion naira across 4 instruments to investors, reopenings of the 12.50% January 2026 10-year bond, 12.50% March 2035 bond, and the 12.98% March 2050 bonds, and a new issue for July 2045 bond. Nonetheless, Kodos expects some increased activity at the secondary market as investors cover lost bids at the auction, which is likely to be oversubscribed. Let's go to the foreign exchange. Foreign exchange market, the FX market becomes very, very important at this time for the Nigerian market. The CBN's foreign reserve sustained its descent as FX outflows continue to outpace inflows, looking at last week, thus dipping by $13.78 million week on week to $36.12 billion. Nonetheless, the Naira weakened against the US dollar by 0.4% week on week to 388 Naira 50 kobo to a dollar at the import and export window, and by 1.1% to 470 Naira to a dollar at the parallel markets. In the forwards market, the Naira weakened against the US dollar across the 1 month period by minus 0.4% to 390 Naira to a dollar. 3 months period of 0.3% to 293 Naira 51 kobo to a dollar, and in the 1 year period 0.1% to 413 Naira 53 kobo to a dollar. Contracts, while it strengthened by 0.1% to 298 Naira 22 kobo to a dollar in the 6-month contract period. Market. Kodos still sees legroom for the currency to depreciate further, at least towards its rare derived fair value. The prognosis is hinged on the following: the widening current account position. Second is the currency mispricing, which could induce speculative attacks on the Naira, and the resumption of FX sales to the BDC segment of the market, which should place an additional layer of pressure under the reserves as the Central Bank of Nigeria funds the backlog of unmet FX demand. Part of those things I expect that the MPC will be discussing today. Let's go on to the global markets. What has been really happening? Let's give a snapshot of a bit of activities in the global markets. The global markets last week were broadly positive as progress on the possible COVID-19 vaccine brought some upbeat earnings reports, and stimulus talks fed into hopes of economic recovery from the coronavirus-induced downturn. The U.S. Dow Jones Index closed at plus 2.5%, while the S&P closed at plus 1.0%. The European stocks, Europe closed at plus 1.2%, while the FTSE London, FTSE 100 closed by plus 2.3%. Stocks looked set to record weekly gains, and the Asian markets were mixed as the Japanese well-known Nikkei hit plus 1.8%. Stocks closed higher on the preceding factors, while state media's criticism of China's SSE dropped by minus 5.0%. The largest domestically listed stocks plunged its index to its lowest level since February. Emerging markets, according to the MSCI, combined dropped by minus 2.2%, while frontier markets, the MSCI FM, dropped by minus 0.3%. Stocks were set to close lower as virus infections surged in the US, India, Russia, and Brazil. These are 4 very critical economies across the globe, huge population, densely populated nations. The ongoing dispute on trade and other issues between Washington and Beijing also hammered risk sentiment. So all eyes globally will be on US, White House, and of course, State House in Beijing, how they carry out the trade interactions. Don't forget that prior to COVID-19, the US-China trade talks was described as one of the singular factors that would shape the direction of the global markets and the global economy. But now COVID-19 has overtaken it as the most singular risk which has to be addressed. Let's get on to some corporate activities and performance. Unilever Nigeria PLC declared a turnover of 60.5 billion naira. You heard that. 60.5 billion naira for the financial year ended December 2019. I call that a whooping turnover. And in line with its resolve to enhance profitability, the board and management of the Unilever Nigeria PLC assured shareholders of its commitment to good corporate governance that would in turn drive sustainability and efficiency across every aspect of the company's operations. Of course, when you make such turnover, corporate governance is very important. This was at his 95th annual general meeting recently of the company, where the chairman of the board, His Royal Majesty Nnaemeka Achebe, commended the shareholders for their trust and loyalty to the company. He noted that despite the challenging business environment, which has now been complicated by the COVID-19 pandemic, the management at Unilever Nigeria will remain strategic in their approach to sustaining the company's operations to revert to profitable and sustainable growth. The 60.5 billion revenue in the year under review represents a decline compared to 92.9 billion naira. So when we think that was huge enough, it was low compared to its previous year performance. And then profit after tax showed a decline at 7.42 billion naira for 2019 compared to 10.55 billion naira recorded for the year ended December 2018. These results reflected challenging operating conditions, but also company's decision to tighten credit terms to address exposure from trade receivables and excess stock in trade to better position the company for innovation and a return to competitive growth. Taking a quote, it said, although we are not declaring dividend for full year 2019 or financial year 2019, we are optimistic because our results showed that we made progress in some other critical areas of our operations, which speaks to the fact that we are on the right path to growing our business for profitability and better returns on investments for our shareholders. Therefore, the task before the board and management is to drive our strategic objectives that will not only keep the business afloat, but also ensure it operates efficiently, His Royal Highness Nnaemeka Achebe said in the meeting. The company, in compliance with the federal and state government's directive on social distancing, decided to hold the AGM by proxy in a bid to avoid unnecessary physical contact among attendees as part of measures to reduce the spread of the coronavirus as a responsible company. Yes, so we will be watching Unilever to see how they hope to navigate this period. Note that in financial year 2019, there were prevailing conditions and they experienced a decline. So how are they going to navigate 2020 and achieve some level of profitability? Big question as we continue to navigate the impact of COVID-19. Let's go on to our regulator, the Securities and Exchange Commission. Interesting news from SEC. The Director General of the Securities and Exchange Commission, Mr. Lamido Yuguda, is on the news again. And why is he on the news? He's pledged that his commission is determined to provide the enabler for increased activities in the market and investment. They want a good way of starting his leadership. He said this during an interview over the weekend, that it will help to attract more retail investors to the capital market and ensure steady growth. We need much of that. The penetration is very low. According to him, we need to make operations in the capital market as easy as possible. That way we can attract investments. Speaking further, I said, we are aware that some investors have left their money due to the Herculean procedures involved in getting them. Hence, our desire to ensure that people are able to benefit from investments. With that, we can increase investor confidence. We will look at the processes involved and streamline them to ensure that investors are able to get their money without much difficulties. Speaking further, he said, when that happens, people can be motivated to come back to the market. Unless we're able to attract people back, we cannot get the capital market that we can be proud of. We should make our local individual investors the key to succeed in our quest to rebound the market. Local investors don't have anywhere to go. And as long as they trust us, they will remain. He also stated that the Commission has zero tolerance for sharp practices in the capital market and urged stakeholders to ensure that they operate according to the laid down rules and regulations. And he also said that they will not condone sharp practices in the market. They will ensure that everyone plays by the rules, as that is one of the ways in which they can attract these investors when people are aligning with the procedures and rules. He further stated that investor protection will be at the center of the initiatives of the new management, warning that any operator that shortchanges investors will not go scot-free. We've heard that now for the second time on the SECDG. He says that retail investors are key to the development of the Nigerian capital market, and we want to assure investors that this market is for them, and we are ready to do everything to ensure that we increase investor enlightenment through education, robust regulation, and fair dealing. According to him, we have robust rules and regulations guiding conduct in the capital market. We therefore urge operators to obey these rules, but for those that want to defraud investors, there will be no respite, because we are ready to fight market manipulation, sharp practices, and anyone that flouts the rules will be made to face the consequences of their action. That is the DG of SEC Nigeria, Mr. Lamido Yuguda, giving his clear direction of what will be of interest to him. And speaking further to investor issues, he said initiatives have already been rolled out by the Commission, including the e-dividend, regularization of multiple accounts, direct cash settlements, amongst others, in order to have the benefit of their investments. The SEC boss stated that the Commission introduced a forbearance window to enable investors that bought shares with different names have in the market and the country. And he said that there was no penalty for doing so, as SEC is not prosecuting anyone. He wants them to be able to get the benefit of their investments. But however, people have still not been able to claim their dividends because some of them have forgotten the names they used, while others have not been able to prove to the stockbrokers that they are the owners of the shares. SEC has given such shareholders amnesty to go and claim their shares, and as people are claiming these shares, unclaimed dividends number will go down. On the part of SEC, they will continue to persuade investors to regularize their accounts in order to curb the problems of unclaimed dividends. It's a huge burden on claimed dividends. Please, if you're a shareholder, wherever you are, do well to go and regularize your accounts and sort these issues out, because it's too huge, something to leave out there. Now let's look at the euro markets. The euro and eurozone bond markets held out hope European Union leaders would strike a deal on the recovery fund for the bloc's pandemic-ravaged economy. The region's stocks markets took a cautious turn lower as stocks paused. The single currency hit its highest levels against the dollar since March 9, 2020 at $1,146, 7 after reports of progress following 3 days of negotiations towards the proposed 750 billion euro fund for stabilizing euro nations affected by COVID-19. The bond markets also cheered the progress, with the risk premium investors paying for holding Italian government debt over Germany's. The bloc's benchmark falling to 162 basis points, the lowest level since March 27. The stock markets kept the optimism in check. However, the pan-European stocks 600 index fell by 0.6% in early deals. Talks on the funds were adjourned, and that will continue in the week. After the adjournment was announced, both the Austrian Chancellor Sebastian Kurz and Dutch Prime Minister Mark Rutte said progress was being made in the discussions. A group of wealthy Northern European states have pushed during the summit for a smaller recovery fund and sought to limit how payouts are split between grants and repayable loans. An attempt to reach a compromise failed yesterday. A deal envisaging 400 billion euros in grants went down from a proposed 500 billion euros, and this was also rejected by the Northern rich states, which said it saw 350 billion euros as the maximum. Discussions over the grants has since been narrowed, with the European Union Summit Chairman Charles Michel saying they will be based on 390 billion euros combined with smaller rebates. According to Marshall Gittler, head of investment research at the BDS Suisse Group, the euro has gained on the likelihood that they do come up with some solution at the meeting. Well, let's hope that they resolve this funding for the COVID-19, and that will be very important at this time. Let's go on to a very major development, or one interesting activity also in the European market. The FTSE London fell with the energy stocks tracking a decline in oil prices and concerns about the global spike in COVID-19 cases, while Marks and Spencer slid after a report that the retailer was planning to cut hundreds of jobs. If you know Marks and Spencer, you know what they do when it comes to retail industry. Marks and Spencer, one of Britain's best-known high street names, fell 2.2% as Sky News said the company planned to announce the cuts this week, part of a structuring that could affect several thousand employees in the coming months. The commodity heavy blue chip index was down by 0.9%, with BP, that's British Petroleum PLC, and Royal Dutch Shell among the biggest drags. The mid-cap FTSE 250 shed 0.5%, led by financials, consumer discretionary, and real estate stocks. Stock markets in Europe also kicked off the week on a glum note, with EU leaders still negotiating, like I said earlier, those terms of contracts. So Europe will be on the watch, Europe, because of that discussions. Let them agree on something very robust for recovery from COVID-19. Well, in the period of the COVID-19, I must tell you, it's very interesting to know that people are writing books. Yes. It's a time to reinvent yourself. It's a time to also provide solutions. So tomorrow, Tuesday, July 21st, 2020, the book, Financial Intermediation, Operations and Practice, a guidebook for financial market operators and practitioners, will be formally presented by Mr. Seyi Adetunbi. He's the Chief Responsibility Officer of Value Investing, and this is out of the book. It will hold through the digital platform and video conferencing medium Zoom by 2:30 p.m. The event will feature capital market leaders, regulators, captains of industries, technocrats, and senior public office holders. The book will be reviewed by Mr. Bola Ajomale, CEO of NASD PLC, with Senator Ibikunle Amosun, Chairman of the Senate Committee on Capital Markets, Mr. Kayode Alabi, Deputy Governor of Kwara State, and Mr. Boyega Alabi, Deputy Governor of Osun State, as lead presenters. Special guests at the event include Alhaji Lamido Yuguda, Director General of the Securities and Exchange Commission, Ms. Aruma Ote, one-time Director General of the Securities and Exchange Commission, and Ms. Yewande Sadiku, Executive Secretary and CEO of Nigerian Investment Promotion Commission, attending and leading the session. The chief presenter of the book will be Chief Dele Fajemirokun, a distinguished entrepreneur, while Dr. UJ Itsweli, Chairman, Dubrin Oil, and Mr. Atedo Peter Sai, Chairman, ANAP, will serve as special guests of honor. Dr. Alimi Abdul Razak, the Chairman of Forte Upstream, will serve as the Chairman of the event. You can join that event, live stream of that event from WebTV NG. Just log on to www.persianng.com and you get onto WebTV Live and you can participate, learn a lot from that event, which is coming up tomorrow. So much to talk about the markets this week. A lot is happening, at least at the global level. What is happening in Europe, if the leaders will agree in terms of the fund to stabilize the European nations, will be key to how the European markets perform. Globally, of course, response to COVID-19 from leading countries like the US, India, Brazil, and Russia will be very key to how the world responds and reduces the tide of COVID. In Nigeria, the Monetary Policy Committee meeting holding now and the Central Bank headquarters in Abuja was also very key. All market players will be watching to see what Governor Mr. Godwin Emefiele will be announcing as the monetary policy rates, as the central bank response and continued strategy for the foreign exchange management, and of course the cash reserve ratio decisions, the liquidity ratio decisions, and the symmetrical corridor decisions. All those parameters, those decisions will have some impact on the fixed income, money markets, and of course the foreign exchange. So we will be monitoring the impact of that decision. And yes, things will be happening across all the exchanges. We will bring them to you as they come. It promises to be an interesting week. But we want to say this very importantly, in this period, be very careful of your investments. You save a lot, you work hard, you have money you save, you want to invest. Please, you must ensure that it's regulated by the Securities and Exchange Commission and registered by them. Also, if you need further insight or want to make good investment decisions, you can always can be easy to make, but if you do lose it, it could be very difficult to regain, and it must be invested well. That's why we're here for you. That's why Market Review is here for you, to give you how activities in the financial and capital market relates with our economy. So let's keep it deep. Let's continue to engage in the markets, and let's continue to follow developments in the markets. That will be all for the Market Review today. You can join our website, www.prochange.com, to watch our videos with our news reports and analysis. It promises to be an interesting week. Keep a date with us tomorrow at 10 a.m. to come your way again. Thank you for watching. Have a nice day and stay safe.